Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 30th, 2025, and we're diving into the second quarter earnings report of WP Carey, a leading net lease real estate investment trust. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. WP Carey has just released their Q2 2025 earnings, and there's a lot to unpack, from their financial performance to strategic initiatives.
Revenue and profitability overview. Let's start with the revenue and profitability. WP Carey reported revenues of $430.8 million for the second quarter, which is a 10.5% increase from the same period last year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by increased lease revenues due to net investment activity and rent escalations. However, it's important to note that net income dropped significantly to $51.2 million, mainly due to a mark-to-market loss on their investment in Lineage and higher losses from foreign debt remeasurement.
Despite the drop in net income, the AFFO per share increased to $1.28. How significant is for investors?
This is quite significant, as AFFO is a key metric for REITs, reflecting the cash generated by the company's operations. The increase in AFFO per share by 9.4% from last year indicates strong operational performance and effective investment strategies.
Investment and disposition strategy. WP Carey has been active in both investments and dispositions. Can you elaborate on their strategy and its impact?
Absolutely. Year to date, they've completed $1.1 billion in investments, with $548.6 million in the second quarter alone. This aggressive investment strategy is complemented by $565 million in dispositions, including the sale of 15 self-storage properties. This strategy allows them to reinvest proceeds at attractive spreads, enhancing their portfolio's quality and growth potential.
And how does the same-store rent growth factor into this?
The 2.3% same-store rent growth is a positive indicator of their portfolio's health, showing consistent income growth from existing properties, which is crucial for sustaining long-term AFFO growth.
Balance sheet and capitalization. Let's talk about their balance sheet. WP Carey reported total liquidity of $1.7 billion. How does this position them for future growth?
With $1.7 billion in liquidity, including $1.3 billion available under their credit facility, WP Carey is well positioned to capitalize on future investment opportunities. Additionally, they issued $400 million in senior unsecured notes, which provides further financial flexibility.
What about their debt levels?
They have a total debt of $8.6 billion, which is manageable given their strong cash flow and investment-grade credit rating. This balance sheet strength supports their growth initiatives and dividend policy.
Dividend and guidance. WP Carey has increased its quarterly dividend by 3.4% to 9 cents per share. How does this reflect on their financial health?
The dividend increase is a strong signal of confidence in their cash flow stability and growth prospects. It also aligns with their raised AFFO guidance for the full year, which is now between $4.87 and $4.95 per share, reflecting a 4.5% growth at the midpoint.
And what about their investment volume guidance?
They've revised their investment volume guidance upwards to between $1.4 billion and $1.8 billion, indicating a robust pipeline and strategic focus on expanding their high-quality real estate portfolio.
Key takeaways. In summary, WP Carey has delivered a solid performance in Q2 2025 with strong revenue growth and an increase in AFFO per share. Their strategic investments and dispositions, along with a healthy balance sheet, position them well for future growth. John, any final thoughts?
WP Carey is demonstrating resilience and strategic foresight, making it an attractive option for investors seeking stable income and growth potential. Their increased dividend and raised guidance further underscore their strong financial health.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on WP Carey's performance in the comments below.